So I thought about talking about how you can put together a box trades of various derivative transactions and options to be able to replicate and beat the market, because I thought that's where you'd wanted to go. But then again,
How do you spell that?
yeah, I hardly even know what that is. But I thought not to go there. But so as I was trying to think about how to approach this and what to talk about, I thought, okay, there's various different ways to look at it and think about it. You get me talking, and I can literally talk for 3 days on these kinds of topics. So the challenge is scaling it back from 3 days to 45 minutes. So I've got a bit of a hodgepodge of different things, which in my mind all go together. And we'll have time for questions, or if something I say just doesn't make any sense, just stop me in the middle. I do a lot of speaking with groups that are a slightly different composition than this group and slightly different topics. And I always give them full reign to interrupt me, to ask me a question. I say, I give you permission to do that. And I reserve the right to myself to not answer that question at that time. So you have a right to ask, and I have a right to decide not to say anything about it. Usually it's because of timing or it's too off topic. So who am I, to start with? So I'm Doug Anderson. And what are my credentials? Steve said start with my credentials. So I guess most of my life I've been a finance type person. I've got an undergraduate in economics and graduate degree in finance and accounting from a nice school. And I've got the CPA, the CMA, the CIA, the CRMA, which all that means is I'm good at taking tests. So I got a lot of those I've accumulated over the years. But my work experience is probably a little bit more enlightening than the initials. So I started after I got out of graduate school, in public accounting. So public accounting are those people that are auditors that go and audit and say your financial statements are fair representation. And I did that for 10 years. Did a little bankruptcy in there, related work, had some fun. Actually worked on a DeLorean motor bankruptcy back when. So we're not going to talk about that, but we'll, no, that I don't have that for my 45 minutes. After about 10 years, we moved to Dow Chemical up in the middle of Michigan, and I worked there for over 2 decades. A variety of jobs, but mostly internal audit. And most of you probably have no idea what internal audit is, and that's fine. But what that means is I would go in and look at processes and activities to see whether management was handling them right and reducing risk adequately. And I pretty much audited almost everything in the Dow Chemical Company in that time period. So I've got a lot of exposure, but I also was in the business for a while. So I was a finance leader for one of our latex businesses, for our latex business, and I didn't know what a latex business was. All I know is when you Google latex, you don't like what you see. So I learned what latex was by going to the manufacturing people and finding out it's for paper coating and carpet backing and water and wall paint. So that's if you want to know about latex, ask me. I'll tell you. So then after I left Dow, I went to university for 2.5 years, and I was professor of accounting and finance before we moved to Orlando 2 years ago. And now I work for the Global Association of Internal Auditors. And I do a little bit of side work on the side. In fact, I was talking to Saudi Arabia this morning on something. So I still do a little bit of that. But, so that's my background on what I've done is from work-related things. But more interesting, at least for me, I think, is a little bit of background on Carol's and our kind of progress through life when it comes to finances on personal side of it. So when I was in school, we were, well, I won't go there. We were in a Christian group. Well, it's just hard to explain. So we were in a group, and it's like every college kid, you're trying to figure out what am I going to do with my life. And I knew a lot of people were going to go into ministry or do something, and they're flipping burgers 20 hours a week so that they can minister 20 hours a week. And I thought, okay, God, is that what you want me to do? And I've distinctly heard God tell me, no, that's not what I want you to do. What I want you to do is go out and make as much money as you can so that you can pay for the guy that thinks he has to spend 20 hours flipping burgers, so instead he can spend full time doing ministry. You don't have to do ministry to support ministry. You can go out and make a whole bunch of money and support ministry. So that's kind of what we've been doing, or trying to do. Now, it wasn't always simple. We didn't always make lots of money. Right? So when I graduated from graduate school, we were in debt. It wasn't as expensive back then as it is now, but my debt exceeded my annual income when we started. And we were going well, and things went really well. And then we decided to, well, let me ask this. Anybody know the movie The Money Pit? You heard that? Well, we did one of those, right? And so We spent a huge amount of money in a house, but it was not a problem. We almost got it done before I lost my job, right? So, and then that's what precipitated the move to Midland, taking about a 35% pay cut and ending up with in excess of my annual salary in credit card debt to pay off the renovation that you couldn't mortgage and all that. So we kind of went all the way back to ground zero again to work our way back up. But we were blessed and we got through all that, and now we're doing fine. But all that's to say, no matter where you are in your financial history, except for bankruptcy, we never had to do bankruptcy. But I did have to, well, gee, that's a new credit card offer. Maybe I'll sign up for that, and I'll move $5,000 there for 6 months, and then I'll move $10,000 here for a while. We did that for a while to just juggle everything. So we've probably been where most of you have been in one form or another. That's kind of our background. I got to turn my page. And I use notes. I've gotten to the age that if I don't write things down, I forget them. And there's a backstory as to why we moved to Florida, but like I said, if you want to know, you can ask that later. So Steve has been talking about balancing and reconciling. And to be honest with you, I can't say that I get inside his mind and exactly know what he all means about balancing and reconciling. But I wanted to say, well, how I think of it as a finance person. What does it mean to balance and reconcile? So, as an accountant, we're always balancing stuff, right? You're balancing a bank statement. Do you know that students now don't learn how to balance a bank statement? That's amazing. When I used to teach accounting and teach finance, we used to teach that at the university level. But in any case, balancing, in my mind, is really weighing multiple things and trying to figure out one versus another and balancing it out. You're looking at multiple inputs that go into something, and you're trying to make sure they balance out at the end of the day. They settle down to where they're supposed to be. For reconciling, it's a little, and you do that in lots of parts in life. You do that with your time, with your job, with your interests. Well, you do with your money too. As far as reconciling, that makes it a little bit easier. When an accountant reconciles something, there's an objective to reconciling it. And it's not just to come up with a schedule and for employment. You're looking for the mistakes. You're looking for the errors. You're looking for something that doesn't fit right. And you reconcile it to sort out, okay, is what's in that account or in that statement what's supposed to be there? And you find it by comparing one thing against another thing, and you reconcile it. And what happens in reconciliations, if it doesn't reconcile, there's a mistake. There's an error. There's a problem in there that you're trying to pull out. Now, if you didn't reconcile, you'd just be moving forward in blissful ignorance, and eventually it'll come back and bite you. And it's important then for finance and accounting people to reconcile as we go. And you think about your life, same thing. There are things that we can just let go in blissful ignorance, and you just keep going and going. And at some point, you're going to get bit by it. I mean, there's a real difference in my mind between trusting in God and just being stupid, right? And you don't want to just be stupid. Trusting in God is different than being stupid. And so reconciling and watching what's going on in your life, and especially in finance area, is you don't want to be stupid. You can trust in God. And we made decisions that weren't always the smartest decisions in finance, but we got through it. But we always watch it. So it very much from the perspective of my background, reconciling means taking stock of where you are, looking for the mistakes, looking for the errors, figuring out what you have to do to correct that, and correcting it moving forward, and not operating in just blissful ignorance, but stopping and looking and considering what you're doing. So with that, there's some kind of basic principles about money that I guess I've learned. And I was thinking about this, well, what do we use money for? Right? What do you need money for? And I could only think of three things, three fundamental things. One is to survive, basic necessities. Right? So you have to feed yourself, you have to have clothing, you have to have shelter. So you have basic necessities in life. Okay, that's one. Secondly is support kingdom work, support ministries. That's the other reason you make money. And the third money is, I put it in a category, making life more enjoyable. Right? And I do think that's a valid point. I mean, I know we went through Dave Ramsey's, what is that called? Financial Peace University, a little while ago, to see, basically, I was really curious to see what he taught, is what I wanted to see. And he had a phrase in there, which I think is true. He said, live like nobody else so that you can live like nobody else. Meaning, set yourself up well financially so that when other people are struggling or having difficulties, you can live decent. You can live in peace and adequately. And so I think there is some value in saying, okay, if I've got my, if I'm covering my basic provisions and I'm helping out ministry or other people the way I should be, you do have an opportunity to make life a little bit easier for yourself. But it's more interesting to think about what life should not be, or I'm sorry, what finances should not be. And the first thing that really imposes on myself is it should not be a distraction. In my mind, finances is an enabler. Finance and money is not something you're trying to get and trying to accomplish. It's an enabler. It just allows you to do those other three things. But in and of itself, it's not an ends. It's just a means to those ends. Unfortunately, though, money can be a distraction. It can be a hindrance. It can be something overwhelmingly difficult. When we had our little money pit experience, I spent a lot of time on finances, juggling this, juggling that. When can I mail this check? I mean, we never were late on a payment. We never did that, but we did have to cut back quite a bit, and we did have to be very, very careful about every penny and every dollar that we were spending. And at that point, it was getting to be a distraction. I mean, it wasn't what money should be in our life. It was something that was taking away from what we were supposed to be doing. So it shouldn't be a distraction. And the other thing that it can be, and I've got a fabulous wife who lets me handle the money so that it doesn't become a source of friction. She just figures that I will find a way, and we will find a way to work it out, and that is what I do for a living. Although, the funny little thing, when I was in public accounting, you would be surprised at how many accountants I worked for that their spouse took care of the finances. And I just never understood that. You mean your spouse is a nurse and she's doing the finances? Okay, it was incredible how many, and I guess they did it at work, so they didn't want to do it at home. I can't do that. I want to do it. So, money shouldn't be a source of friction. Right? It shouldn't be a source of friction in your family, in your marriage, or in your community. And it also shouldn't be a source of anxiety. It should be an enabler, something that's there, something that facilitates what you're trying to do, but not be a distraction, a source of friction, or a source of anxiety. Right? So money enables, but one of the dirty little words is that it takes discipline. Right? You can't just blissfully go through life in ignorance and say, it'll work itself out, God willing, God won't give me anything I can't do, or whatever the little buzzword you have, right? It takes discipline, just like a lot of things in life take discipline. You have to discipline your time to get everything done. You have to discipline your eating, or you end up being on your 600-pound life or whatever that show is. You've got to, everything in life takes discipline. Well, finance is one of those things. And your life must be in balance, right? If your life is not in balance, this could easily be something to get out of whack, and it has to be in reality. So I thought about using this example, given what Steve said last Sunday, but I'll use it anyways. At the church we were at before, we did a capital campaign. Okay, and I understand now that's a bad thing around here, but I'll go with the example anyways. It's so we were part of a tradition. Well, not a tradition. We were actually part of a quite a good church, but we did a capital campaign, and I think it was one of the few capital campaigns this church did. And they had trouble. They had trouble getting started, and finally they asked the guy to take it over, and he said he would do it only if I helped on the money side of it, because I knew him pretty well. So I jumped in and helped on the money side of it. And my guiding principle in all that is, the money for this, we needed an addition. We were growing as a church. We needed classrooms. We needed a choir room. We needed those things. We didn't have any choice. And the question is, how do you pay for it? So my approach to that all was, finance is the same philosophy. Finance should be an enabler. It should not be a distraction. It should not be a source of friction. It should not cause anxiety. We want to map out this project of finance so that it just allows us to do what we need to do, doesn't get in the way. So we mapped out the approach to the capital campaign, that we would only do things to the extent that we had the cash available, and we were not going to go out and say, oh, we're short $50,000, we need this money, or we have to send the contractor something. We weren't doing any of that. We were going to do it very simple, program planned. And to the extent that I know one of our friends later who had moved away, and the pastor had gone to him to see if he wanted to contribute to this, when he showed him the plan, he's like, Doug Anderson must have worked on this, right? And I was like, yeah, because I was just being very, very careful on it, which is important. But, which is the opposite of some good friends we had. And they were in that church, and then they ended up moving away. And he worked for a big company. And he had his house, primary house he lived in. He had a fishing cottage up on Lake Huron. It was probably a 3-season cottage. He had a new house they were building in Traverse City, right? And then he got caught up in a whirlwind at work. Those things happen. And he all of a sudden, and he had at least one kid still in college. Was that right? Oh yeah, that's right. He had a house in Orlando, right on the Jack Nicklaus golf course. Arnold Palmer, not Jack Nicklaus. Sorry, I'm not a big golfer. On the 17th hole, overlooking the 17th hole. So he was on his 4th property that he was owning, and he lost his job. Not only lost his job, but a lot of his equity was in the form of savings in the form of stock equities, and that all became worthless all of a sudden. And I remember him calling me up we had just moved here, and he's trying to find a new job. And he's like, I need a job. I can't afford all this stuff. And I was like, yeah. I could have told you this a while ago, but you never asked me. I always wondered how he was doing it. So he all of a sudden found himself, something went a little awry, and all of a sudden his entire life was out of balance. There was friction, there was turmoil, there was anxiety all the way around for something that, it's funny, in this country, in the U.S., unless you're part of maybe a government job or something, I don't know that world that well, you're an at-will employee. I mean, you may be employed one day and not employed the next. That's the way it is. And you have to base on your skill and your abilities what you get you the next job. And especially when you get a little older, that happens. It takes a little longer to find something else, right? And he just wasn't planning on that. And all of a sudden, finance was a huge issue for him, a huge issue. Now, luckily, he landed another job, and he bought another house in Wisconsin. Well, leaving that aside, okay? He's an engineer. What can I say? He's not a finance person, so So now, and let me go from that. Most of you probably think of finances as over here, and that's the way my friend did. He thought of it over here, right? This is a finance thing over here that I have to make sure done right, and then here's the rest of my life. And the way I think of it is, no, finance is throughout all of this, because it's just the reality of life. Your resources, managing, it's not able to be separate and walled off. It's sprinkled throughout. As much as you may want to, it's kind of all connected in. And so one of the things I didn't tell you about was when I worked at Dow Chemical and I ran the internal audit function, it was more than just internal audit. I also had 5 people that did fraud investigations. So we had a dedicated group, FBI agents and the Serious Fraud Office, and I had somebody from the Anti-Corruption and Bribery Commission of Hong Kong, different people in different parts of the world. And what they did is investigate financial fraud for the Dow Chemical Company, and they worked for me. And there are a few things I learned from them, because I'm not an investigator. They were professional investigators that I just gave oversight to. But the first thing they would do, we would get an allegation in. And it might not actually be because just finances. Sometimes we'd be asked to get engaged in other kinds of things that were not pure financial fraud. And I remember probably my best investigator, her telling me one time, whenever we get something like that, the first thing I look at is their expense reports for their travel. I was like, well, the allegation has nothing to do with their travel. Why are you doing that? She said, almost always, if somebody's doing something bigger, they're cheating on their expense reports too. So I first look at their expense reports, and in an hour, I'm pretty good at figuring out whether that allegation, which is unrelated to expense reports, is probably true. Because I can see what the indicators are, and if I can see that they're playing fast and loose with their expenses, or maybe the opposite, if I see them looking really clean in the expenses, then no, they're probably not doing that. But if they're doing something in their expenses, yeah, then that gives me a lot more confidence. I have to be more careful in looking at this and look farther. So that correlation is really, really tight between the two. And I thought, well, that's interesting. And then I had another situation. I'll have to be a little bit vague. Well, part of it, no, I don't have to be vague. It's public. Dow had a little problem back in 2007. where we had like one of the top executives of the company didn't like the strategy that the board was pursuing. And there was the ex-CFO was still on the board, and he didn't like it either. So those two got together, and they decided that without telling management or the board of directors of this company, and for those of you that don't know Dow Chemical, at the time, there's a little merger recently that's changed this, but at the time, they were about number 60 on the Fortune list, you know, a $50, $60 billion global company. So it's a big company. These two guys decided they didn't like the strategy, so they went out and arranged investment bankers in London and money from an Omani investment fund to try to buy the company without telling anybody they were doing that, which you can't like do, right? You can't work against that. And they were found out. And the reason I can talk about it, it was in Fortune magazine, it was written up, and so it's out there. You can go read the story if you want. In fact, I've got a copy of it sitting on my desk. I like looking at it. But not long after that, well, it's just a wonderful story. But yeah, it is light reading. For what I do, it's fun reading, not maybe for all of you. But at that time, one of the two guys, the guy that was like one of the top executives, about number 3, 2, 3, 4 in the company, depending how you want to define it, was somebody I'd given a lot of attention to as the head of internal audit. I'll just say it that way. And one time, right after this broke, and I was walking down through the executive wing, the current CFO at that time, not the guy involved in this, grabbed me and he said, "Doug, you ought to feel really good about yourself. Everybody knew you were out to get Romeo." That's this guy's name. And I said, "I wasn't out to get Romeo, but I kept seeing things in how he operated that told me there was a problem." And what I felt bad about was that I couldn't find something, and not that you're trying to actually catch somebody, but I was pretty confident by then there was problems. But unfortunately, I could never find anything we had to go through all of this. I mean, it was a huge scandal that these guys are trying to buy out, made all the papers and all that stuff. So all that's to say is that what I have learned over time and seeing this is that, and what they were trying to do was not necessarily a financial thing, it was a strategy thing. And there were other things that he did, which were not financial things. I had been looking at things he had done financially. And they all kind of connect together. So while some people want to think, well, finances is over here and that's walled off, and it's like, that's not my experience. It infiltrates. And if somebody is playing fast and loose with finances, there's probably something else out of balance in their life. Right? That's just how it is. It shows up in finances, but it's in other places too. And I'd written my notes. What did I say? Oh, and I had another great example too from work. And this one's not public, so I can be vague about it. But there was this guy that owned a company that one of the businesses wanted to buy the company and have this guy then run it. He'd become an employee and then he'd run it. And I can't remember how I caught wind of it, whether they asked me about it or asked my advice on it. I just don't recall, too many years ago. But we looked up this guy, did a Google search or some other kind of search, and it turns out he'd pled guilty to fraud on his expense reports at a prior company. Well, hear what I said about expense reports, right? And so I went back and told the president of this group that wanted to buy it within the company, don't trust him. I would not buy it because there's a lot of things about it. You just don't do that. And they said, "Oh, no, he's got an explanation. We'll have him come up to Midland. I'll make sure he sits down with you and explain the whole thing." I said, "I don't want to talk to the guy, because I don't need to have somebody tell me why they're so good. I can see by their actions on this one thing, I don't trust the guy." So, of course, what they did is they went and did the deal anyways. They bought it. They hired a guy. And within a year, they were coming back and saying, "Oh, boy, this guy's a real problem. He lied to us about this, and he lied to us about that." It's like, yeah, I mean, like big surprise. I told you not to trust the guy, and they trusted the guy. So, very much it's finance is not walled off. So it's important to be the person you're supposed to be, of course, and it's important to have righteousness in your life, and thus I think that applies to your finances also. So what I wrote, and I got to read this verbatim because I won't remember it, you don't want to fool yourself into thinking money or something you can spend money on is, and the quote I love, is more valuable than your values. So there was an investigation in the BBC. There was a BBC On Talent personality that was he died, but after he died, there were all these allegations that came about his sexual harassment of, I don't even remember if it was women or men or whatever, right? He was a bad guy. So they did this investigation of the culture, and this is what somebody said. When it came to the BBC at that time, there was an attitude that this guy was more valuable than our values. So it was worth rejecting our values because he has so much value. So when you think about money in that sense, what is money that you want to get, or money or something you want to spend your money on that's more valuable than your values? At the end of the day, your values have to reign supreme in that. So I got thinking, what does that mean? So it's all tax time, right? So you're all doing your taxes now, or have already done them, or you'll wait for another 2 months to do them. And I've always thought it interesting. They publish averages that based on your income, what's the average charitable contribution? What's the average in taxes? What's the average this? Hint, hint, if you put number close to this on your return, you won't get audited. And I always wondered how many people said, well, gee, my charitable contributions are only $322. But since it says the average for my income level is $1,300, I'll just put an extra 1 in front of it, and as long as I don't get audited, I'm upset, right? Or if anybody works for money under the table and doesn't report it. So if I work and get cash, so I've done some work for Saudi Arabia, right, for a company in Saudi Arabia, and I got paid for that work in Saudi Arabia. How, there is no reporting from Saudi Arabian companies to the IRS as to the money you get, right? So they would have to find out about this cash wire that came into my bank account, what it was for. But of course I'm going to report that as income. That's my income, even though there's no record trail of that as income. Or the expense report thing, your own expense reports. While all those things are easy things that people convince themselves, well, I could do that and nobody would know, and it would get me that extra money to get me over the hump. What you're doing is sacrificing your values. And you're saying that money is more important than your values, and it never is. They never do that. If you can rationalize, there's something in the world that I operate in the fraud world, called the fraud triangle. Dr. Kresley thought it up in the 50s, and I don't even know who he is. But it talked about opportunity. To perpetrate fraud, you need 3 elements. There's opportunity, there's need, and there's rationalization. So opportunity is you have a way to do it. Need is you feel some perceived need. I needed money for this. But the real kicker is rationalization, because the human body and soul says you have to somehow convince yourself. Not too many people that steal are actually psychopaths. Most people have a conscience. So they have to convince themselves somehow to rationalize why it's okay to steal that money or to take advantage of a situation or something. And what you find is once people start doing that in the little thing, it grows and grows and grows. So similarly here, whether it's stealing or just spending what you don't have or buying something stupid, because it might be that your values are, well, no, I really need to save up for retirement. I just need to save up for my kids this. I need to save up for the cash reserve. I need to do these things. Gosh, I really do want that 87-inch screen TV for the Super Bowl, but, I got the money, I'll just spend it, but that might be going against your values. Right? And it's what you're spending the money on against your values or not. Because you start doing it a little bit, and it grows, and it grows, and it grows. And then you wake up one day, because you've been going forward in blissful ignorance, so you're not been reconciling what you're doing to what you're trying to do, and you're like, I have no money, right? What am I supposed to do? Which takes me to what I've often seen as common failures in people managing their money and doing things. And a lot of it, what I've seen or I've heard about or people talk to me or whatever, is not rocket science. It's thinking short term. Right. So yesterday was Valentine's Day. It's, eating half the chocolate cake for dinner instead of only the little tiny piece because I'm worth it today kind of thing. And that's great short-term thinking, but it's not great for long-term thinking. And in the money realm, it really gets into, so just for the record, Carol and I split that little piece. We didn't eat the whole cake, right? Looking more at what you're getting today as opposed to what you're giving up for the future. And remember what money is supposed to be. It's an enabler. It helps you do things, and it should not be a distraction. It should not be something that causes friction or anxiety. Well, in the short term, you may feel really good about how you made that money decision. But in the long term, it's going to create anxiety. In the long term, it's going to create friction. In the long term. And often folks think about the early things, and they think about rewarding themselves now and not thinking about the long term. So it is so easy to say, boy, I've had a hard day. We're gonna go out to eat tonight because I don't feel like working it up. And do we really have that $25 for dinner? No, wasn't in the budget, didn't need it. But we'll reward ourselves because I've had a hard day. Or we'll reward ourselves for this. We'll reward ourselves for that. Well, life has got a lot of reasons or excuses you can reward yourself for. And if you focus on rewarding yourself in the short term, you're setting yourself up long term to not being able to accomplish your values, what you're really trying to do, what you're trying to accomplish. Now, what do you need to do to make sure you stay focused on the long term, or the long term, not just short term? Is discipline again, right? Understanding what you're doing and thinking beyond the short term and thinking what the long term means when you get the money. So one of the things that I've told our kids, because as you could probably tell, we've had a lot of discussion about finances and growing up. And I always told both of our kids, when you get out of school, you will not live the lifestyle that our family has been living. So you don't graduate and think, I'm doing well, right? And so I deserve this kind of lifestyle. I deserve that. No, when you graduate, you are poor. you are dirt poor. And don't trick yourself into thinking, well, I'm used to living. No, you need to learn to live like you're poor, not like the way you've been living, right? We didn't get there right away. It took a while to get there. And so they did that, especially when you're young or you're growing a family, you're going to live poor. I mean, I had a situation, I forget where I put this. Oh, yeah, living like poor. I had a great example, not middle class. When I was in graduate school, I can be naturally cheap, right? So the story in my family was in college, I bought the cheap cookies because they didn't taste as good, so I wouldn't eat them as fast. They would last longer, right? Now, that's not exactly the story, but that is the lore in my family that everybody tells me. But what is true, I decided when I was running a little short of cash in graduate school, I had beans and pasta. You throw a little soup in it, and you cook up the beans for a day. Do you know that if you cook up a pot of beans and pasta and you take a serving and eat it, and then the next day you heat it up, but you got to put a little more water in it to get it, you can eat for over a week on one pot of beans and pasta because it keeps growing. Every time you put water in it, it grows some more. So I've eaten beans and pasta for over a week, right? The same meal, the same food, every meal. And that's poor. In my mind, that's poor, right? And it's not fun. And I had a great example of somebody that didn't get that mindset that worked for me. She was a secretary. And she had some personal tragedy in her life. She had gotten divorced. And I think she had to go back to the workforce and start working full time. And she got no alimony, I'm guessing. Because she was telling me about this chunk of cash she got. So she took some time off, took a little vacation, bought a new car, and then was working. And then after about a year, she came to me and basically said, you need to pay me more money because I can't afford to live on what you're paying me. And I'm like, this is not my problem, right? This is your problem. And I'm thinking, you're living like the way you think you ought to live, not the way you can afford to live. And you can't afford those things, and you went and blew your cash reserve, you blew your cushion, and you didn't set up your budget in a way that you could actually live off a salary. And she was making a very good salary. In the little town we were, if you worked for Dow Chemical as a secretary, it was like hitting a jackpot. You literally made twice as much as your alternatives outside the company. Now they've kind of corrected that now, but that's the way it was then. So she was doing quite well. And it still wasn't enough. She didn't recognize that that's not how you have to live. You have to live poor. So there are times when we ran out of money and we had a lot of debt. And it's like, yeah, you live like you're poor, right? And then you figure it out. You always stay within your means. Which gets me to, It's real easy to live beyond your means because of debt, right? Because of credit and debt. So I don't know if you'll get this concept, but I'm going to try to develop it. It makes sense to me. If you're a company, you can get funds to buy things, to invest things, two different ways. You can borrow money, or you can sell stock. So if you're, Darden, right? Olive Garden, they own Olive Garden, Red Lobster, that stuff. It's a company. They've sold stock, and with that stock, they've got cash in. They've also got debt, and they got cash in. And they use that to build their stores and to build the distribution, all those things to prosper, right? So think about you as that kind of company. Now, very few of us sell part of ourselves in stock, right? So that's really not an option for us. But in many ways, they're similar. From a company's perspective, they're similar. Both of them, you're taking in somebody else's cash, and you're giving up something in return for that. The person that gave you the cash expects something back. If it's stock, they expect a portion of your profits. Right? If it's debt, they expect to get interest and the payment. But both of them, you're like not exactly selling part of yourself, but you're giving away some of what you are to those parties so they get the cash. So if you think about taking on debt as a person, you're not selling stocks, so you don't have that. But I think the same concept works of debt. It's almost like you're agreeing this bank, whatever it is going to own a part of you. And you've agreed to that getting their money is worth so much to you, it's worth giving up part of you to them. And you have an obligation to them. You owe it to them. You're not going to just run away from it. Now, you could say, well, it's just my mortgage. And I get that. It's very difficult to buy a house without a mortgage. So there you're judging it, and you're saying, yeah, I'm willing to do that for that. For the 87-inch screen TV, maybe it's not worth it to sell some of yourself or to give up some of yourself, even for a little while, for a TV. Right? Is that consistent with your values of what you're trying to do? Is it worth it? Because you really are losing freedom. When you do that, you're losing your ability to operate the way you want to operate. You're giving up some of your freedom. And so most of you probably recall back 2008, 2009, we had a financial crisis in this country. And a lot of it impacted businesses. And you might have seen it as employees or something. What was happening at the broader scale is companies ended up being asset rich and cash poor. Cash dried up. I remember there was a big government program, and most governments were flooding the markets with cash. And it wasn't exactly my first option of what I would think to do. But I was talking to our CFO at the time, and he operates in pretty high circles. He looked at me, he said, Doug, it was like a body without blood. It was going to die. We had no liquidity. There was no cash. There was nothing in the marketplace. If the governments didn't feed some of that in, it was going to be a horrific situation because there was no liquidity. There was no blood that was allowing things to move through it. It's like, okay. So we're thinking about ourselves again. If you take on debt, that's sucking out your cash in many ways, and you're limiting your flexibility. But you also want to make sure not only to be very cautious about debt, but you need that cash reserve. So who was I listening to on the radio? I think it was Dave Ramsey. I heard him on the radio the other day saying in 2008, 2009, he was buying everything in sight. And I'm thinking, yeah, you're taking advantage of the people that were not smart enough to keep enough cash reserve to get over a hard time. And he was taking advantage of them because he had cash. And he's a real estate guy, so he was doing that. But I remember when I was back in the latex business, the emulsion polymers business, there was a supply chain guy that sat right next to me. And supply chain is managing the movement of the goods, and he also owned the capacity decisions in our business and things. And I walked into his office one day, and his name was Brad. And he was fretting over something. He's like, I've got these metrics, and I'm supposed to do this, and I can't analyze this. I said, no, Brad, just show it to me. He showed it to me. I said, oh, this is easy. This is the right answer here. He's like, why? He said, it's all about cash. At the end of the day, look at your options. Whichever one gets you more cash quicker is better. Ignore the metrics, ignore this, ignore that. More cash better, more cash sooner is better. So even for a $2 billion global business, at the end of the day, the rule is more cash sooner is better. Right? So cash is real critical. So as for us, it's real important to have a cash reserve, right? It's a lot more important to have a cash reserve than it is to have an 87-inch TV. Having that ability to, when something goes wrong, you can pay for it. Because remember, you don't want money to be anxiety. You don't want it to be causing friction. You don't want to be a distraction. And so your refrigerator goes out. We had a little scare. My refrigerator condenser motor started making noise the other day. It's like, and then it stopped. So I'm all good. You know, if I don't hear it, I pushed it back in, and we're good. But I was thinking, oh, shoot, we're going to have to buy another refrigerator and all that. Well, you don't want something that can happen at any time, right? Your transmission could fall out at any time. And you want that time to be filled with anxiety and friction and distraction. Well, if you've got the cash reserve set aside, you use it up for that, and then you raise it again, you accumulate it again, and it just makes a lot more sense. You really want to have it. So, my closing thoughts. Think about how you handle finances in life, making sure you can reconcile your decisions and your actions with your values. At the end of the day, you should have values in what you're trying to do. Make sure those all reconcile, that everything's in balance. Now, you know, with this size of a group, not everybody, well, I'll say it this way. Life is not fair, okay? Some people will do better than other people. That is life. I lucked into a profession that paid well. It just so happened. I like accounting. I like finance stuff. And it turns out that pays pretty well. I've never had trouble getting a job. I've never had trouble keeping a job. That's great. You might have gone into something, but whatever, that doesn't have those same attributes. Well, you know what? Life's not fair. At the end of the day, we can't control that. What we can control is how do we deal with what we have in front of us. There's a book I'm reading right now called Fooled by Randomness. And one of the if anybody's heard about black swans, this is the guy that wrote first about black swans. But one of the things he said in there I thought was really good. He said most executives and companies believe they got there because of their skill and expertise. And probably the truth is most of them got there because of luck, because of conditions. There were probably 10 other people that could have gotten that job and do just as well in it. But because of random events, it doesn't always work out that way. So all that's to say is you can go around life saying, well, it's just not fair. They make more money than I do. It's just not fair. They don't have these problems. It's just not fair. Life's not fair in that regards. You know, there's different pluses and minuses, and there's no way in our system. The only systems that have tried to control for that are communist systems, and they haven't worked so well, right? And so it's just the way it is. I know people at Dow that I saw that made multiple, and I was paid very well, that made multiples of me. And I'm not kidding, 10 times as much as I made. And I made nearly 10 times as much as some, not 10 times, 5 times as much as the lowest level person in my department possibly. So there's huge gaps, right? And was that person that much better than me or other people at my level? No. They just kind of lucked into that job. They were in the right place at the right time. And they were competent. It wasn't like they're stupid, but they weren't necessarily, well, except for one. But they were decent. But I don't know if they were really worth that much. But you know, if you worry about that, you focus on that, all it does is create turmoil. And what's the use? It's just not worth it. And it's important to just stay the race. You know, our economy is going to go. I look today, the S&P 500. You know, we had this big drop in the stock market, right? We've recovered already. The stock market's above where it was at the beginning of the year. The beginning of the year, if I look, is a month and a half ago. All right, so things go up, things go down. Yep. If you be careful, do things according to your real values, look at the long term, not just the short term, don't get stuck. You know, whatever comes up, it's going to be, you're going to be able to weather it. It's not going to be that big of an issue. And the big payoff for that, and I think about different times in my life, is just being in peace about it. Having peace about what's going on so that you can focus on the important things in life. Because finance and money is not the important thing in life. Important thing in life are other things. It's just an enabler that you're trying to do. So that's what I rushed through. But I didn't know if anybody had any questions or any comments or wanted to hear any more stories. Yes? Yes.
Somewhere to Michigan. What propelled you to that
to go to Dow?
Yeah, you said you were good at it, and then, you know,
Well, so I was in public accounting. And the inner workings of public accounting, Where I was, which was on the cusp of going to partner, which is kind of the top level, you have to have a lot of support. And I had a key partner that didn't like me. So I had two choices. I either leave or I change cities, move, and try another 3-year run. And we didn't want to change cities and make another 3-year run. So then you start looking at your options, and the options where I went to Dow. So then when I got done with Dow, there's a whole story about that. You can Google it, Reuters, May 2015, to see why we moved down here instead of staying up in Midland. But again, this job wasn't one that I was looking for. It just kind of fell in my lap, and that's great. I had it, but it's just kind of where things work out. Yeah. Other questions? Other thoughts? Yes.
How much cash reserves should you have?
Oh, that's a great question. I mean, so the rule of thumb. The rule of thumb is, so the question is, how much cash reserves should you have? The rule of thumb is you want to work towards, right? Not that you can have day one, work towards 3 to 6 months worth of discretionary expenses. Not discretionary, required expenses, right? If you can pare back as much as possible. So if you have a mortgage, you've got food, you've got other things, you've got school payments because you have your kids in a great Rock Academy or something, right? You figure out what that is. And what that does, again, I'm real big in financial flexibility and having freedom. If you have that 3 to 6 months and something goes wrong, you don't have to, oh no, what am I going to do? I'm going to, you don't have to address it with anxiety and worry. You're just like, oh, I'm good for 6 months, or I'm good for 3-4 months. I can spend a couple days and think about what I want to do and how do I do it. Now, most people, you can't immediately get 3 to 6 months. I mean, that's a lot of money, right? So you start by setting a nice little goal of $500 or $1,000 and get that aside. And one of the things that I think it's easier for me to do is any found money. What I mean by that is unexpected money. Instead of spending it, throw it in your cash reserve. You didn't expect it anyways, right? So throw it in your cash reserve. And every time you get a raise, take a chunk of that raise and put it aside, because you were living on your salary before the raise. So instead of just spending all of the increase, take a portion of that increase, and you probably won't really notice it. And then over time, 5 years later, you look back and say, wow, I've got that cash reserve I need. Great question. Other questions or comments? No muttering. No. So I was supposed to give time for questions, so that's what I'm doing. Let's see if I have any other stories. I've had lots of stories, but I know. Trying to see which ones I skipped because of timing.
How do you like one of my questions? How do you save for college for your kids? Or talk about when you would get bonuses from Dow?
Well, one of the things that I learned early on at Dow, when I first went to Dow, because we had a bonus program, which was pretty nice, was the guy that I kind of hired in under there said, bonuses are great, never plan to live off it. Never expect a bonus, never plan to live off of it. That's the extra money. And so it's real common for the folks I knew to have a second house. Right? So we were in the upper edge of civilization in Michigan, about halfway up. Above us, there's like nothing there except vacation land, as we used to call it. You go fishing and hunting and all that stuff, but that's it. That's all there is north of Michigan. There's really no industry and no farming. So it was real common to have another house up there. And we what do we need another house for? But people would buy that with their bonus, right? Or they'd put the down payment on it, or they would do something. Or a boat. They all had to have a boat, or they had to have this or that. And I was like, we just don't need any of that. So be honest with you, we planned ahead. I did for about 10 years. I had the ability at Dow to defer my bonuses. So for about 10 years, I took none of my bonuses. And I told the company it was a program, you just keep it. And when I leave, it'll pay out. So I'm getting a lot of money from my bonuses every month, actually more than I get from my paycheck right now. It was intended to be bridging between my employment and Social Security. Right. And it turns out I'm still working because, as my wife says, I don't retire I have a hard time retiring, so I'm.
Very twice of them.
Yeah, so I've had a hard time retiring, so I'm still working. But it was thinking of long term. I was planning ahead, 15 years, 20 years ahead, and saying, well, I will use that money then instead of buying a house or a boat or something else like that, which is just stupid. The other story I guess I was trying to put in here, yeah, there's lots. There's another story I was going to put in here, and I didn't know how this would go over, but I'll say it anyways. I'm kind of blunt sometimes. I remember watching on TV. So you know the GM, the automotive companies, and GM and the automotive companies pay really well. And so up in the part of we were, it was kind of like being a secretary for Dow. If you got on the line or any job in the big auto manufacturers, it was like hitting the bonus. You got paid a lot for doing well. You just made a lot of money, more so than you could get in any other comparable skilled job in a different employer. That was just the way it was. And that's why the automotive industry had such a hard time for a while there, because their salaries and their compensation was way out of the norm. And so GM spun off their the Delphi unit. That was a parts, electronic parts. And then Delphi got to some different owners, and they're like, we're shutting this plant down. So I remember watching TV, and they were interviewing this guy outside the gate, and I figured out by what he was saying, he must have been in his late 40s, 47, 48, 49. And he was like, I don't know how I'm ever going to replace my salary. And I remember thinking, because you're not worth it, right? You're not worth what they've been paying you, but you haven't been real with yourself to know that this was a nice honeymoon period of I made a lot of money, and you probably have, knowing the guys that I knew and just kind of guessing, you have a boat, you have a house, you have a boat, a cabin, a good mortgage on your house, and you're going on good vacations, and you haven't saved.
And good cars.
Yeah, well, that's expected. As Carol knows, you have to have a good car. I always like having good cars. That's just normative. That's not extravagance. You got to have something nice. But I thought he hadn't planned for the possibility that he couldn't replace his salary. And any objective view is he wasn't going to be able to replace his salary. But he didn't really think about that and plan ahead for it. So he didn't do it. And yeah, he was in a difficult, there were a lot of people in a difficult situation because their salary was here and they were worth this much in alternative jobs. And like, that's like my secretary. Well, I need to be paid more. Why? Because I need the money. Like, no, that's not how it works. We pay you for what you do, not for how much you need. That's, so. Other questions or comments? My wife has heard all these for 35 years.
Best question. You're doing great, Talk about paying off the house and then going to that and paying off college for kids. What was our? How did we save for money for? What was the plan?
Well, what I can say, I'll say it this way: I'm careful with money. Right? I'm conservative with money, even though we made a lot, and this is my business. So if there's anybody that's supposed to be able to navigate and do all the right things and keep out of trouble, it should be somebody with my background. Right? So we get up to Midland, we're deep in debt, we have to mortgage everything. We're mortgaged up to the hilt, we have no money, and we work our way out of that. And then I get a nice big bonus for something we did. We had a nice transaction that I dealt with a lot, and so there was this special award thing, so I got this special award. And we got close, and with that, putting all of that against my mortgage balance, and then another bonus later in the year, we paid off our mortgage. Wow. And I remember my boss at the time, who was a very smart guy, I liked a lot, I remember telling him, wow, I just was able to pay off my mortgage. And he was like, well, why would you do that? Why would you pay off your mortgage? Because the interest is deductible, and the concept in finance is you can make more money in the markets or in alternative investments than you can by avoiding interest on your house, because interest rates on house are less than what you can make in the stock market or somewhere else. So, and I even then later had our financial planners who were good folks. I trust them a lot. They went to our church, and they were the same way. Well, you should mortgage your house. I mean, it already paid off. Mortgage your house to generate cash to put in investments, because the arbitrage opportunity is going to net you more money than it would otherwise. And in theory, they're right. Right? They're absolutely right in theory. And I just looked at him and said, I value the flexibility of not having that payment. I will give up what should be extra money extra return. I make enough money. I don't need that to give up the flexibility. So when it came to college for our daughter, we had been saving up money in a 529 plan. But when we got there, since I had no mortgage, I didn't have to pull it, right? So I could just pay her college out of our normal cash flow. And then when my son came along, then we used the 529. But it was because of that flexibility we could decide what to do, which was nice. Yes, you had a question? Oh, yeah. I mean, so the question was I'll restate it a little bit. Did I appreciate the various stages we went through? Yeah, absolutely. I mean, it's, how do I say this without, I've had the blessing in my life to operate with a lot of people that are important, right? That operate at fairly high levels. And they are really full of themselves. What can I say? Now, not always because of arrogance. Sometimes it's just because things have always gone well in their life, and they just operate at this level, and they think that that's just defines reality. And if you're not there, well, that's your problem, and we operate at this level. And it is really instructive when you're like, shoot, I don't know how we're going to get the money up for this. We're just going to have to, be careful, or something will come in, and it really does ground you in what's really important. And that's kind of where I've learned some of the things of, flexibility, caution. They have value beyond. In finance, you make business decisions based on net present value, IRR, different metrics of what you do to look at value, right? In this one, but they don't value peace of mind, without anxiety, and flexibility. And that's not part of how a finance person looks at it. And that, to me, is a big part of looking at it. And you learn the importance of that when you have no flexibility, and you have no peace, and you have anxiety about being able to go forward. Then you can, it's a different situation. So it's all worthwhile experiences, absolutely. Yes, ma'am. We only got two minutes.
Okay, talk about financial planners and charitably inclined, whatever the term was.
Well, I'll say it a different way. So my wife said, talk about financial planners. So financial planners are really helpful. If you're not comfortable in finances, having somebody help you with your finances is really, 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 really helpful. Because sometimes it just needs somebody else to look you in the face and say, you've heard this phrase already, stop being stupid. We got to do something right. You start with saying, what are your objectives? What are you trying to do? A good financial planner, what are you trying to accomplish? Then how can we help you get there, right? And one of our objectives has always been able to support ministries, right? To give money away. My guideline was always live on 25%. Well, 25% goes to taxes, roughly a little more. 25% we live on, 25% we save, and 25% we give away. That was kind of my breakdown when we were doing when we were my highest income earning ranges. And yeah, we confused one financial planner really bad. And I went through a financial planner just because I didn't want to do all that work. There's just a lot of work. And so they came up with a term for us called charitably inclined. So we'd have a new tax person come, or a new insurance person comes in the team, and they'd have to stop and say, no, the Andersons, they're charitably inclined. They like to give away money. I was like, okay, that's good. But so leaving that aside, that's what Carol was referring to. There is real value in having somebody else help you with your finances if you don't seem to be going anywhere. Because maybe you just need somebody to look at you and say, have you thought through your objectives? Have you thought through your possibilities? Have you thought through what you're doing? You just got to sort something out here, because you're going to just stumble forward in the dark, and you're going to hit a wall someday, and let's not do that. So with that, I am out of time, so I don't want to hold you over. So that's it. Thanks.